Hello traders, how are you? Vladimir Ribakov here from Traders Academy Club, and welcome to the weekly Forex analysis and forecast for the week of 9 to 14 February 2020. After the amazing, way above the average trading months of January, the first week of February started slower. Synchronizations of the multi-time frame, the style I trade with, basically lost, and there were no clear synchronization from the higher time frame to the mid time frame. The main activity was on the shorter term of trading. It's very important to be able to read these things, and I will be presenting these techniques exactly now in this video, explaining where is the power of it. But before I start, if you are watching this channel for the first time, first of all, welcome to the trading community. I would like to invite you to subscribe to the channel. Just follow the subscribe button below the video. As well, I would like to invite you to join our free Telegram and to join my live trading rooms, where I present all the trading ideas and follow them during the week with the updates on daily basis. Right now I would like to go over the previous week forecast that is always published for you in a text version on Mondays. So go to the blog vladimirribakov.com or come back to this video on Monday evening, and you would find the text version available for you there. So right now I would like to go over the analysis and see which of the opportunities worked best for us, which failed, which still relevant, and which has to be updated, and also to share the new ideas as we have them. But before that, a quick update. Starting from next weekend, basically the next 2 weekends, I would not be around, would not be available to upload my video. So on the next weekend, Jordan, our chief trader from Traders Academy Club, will do that instead, and will publish the video for you inside this channel. So just follow up and see his work and enjoy that. And that's all. And now let's start. The first one we were planning to trade was the Euro Yen. One of the ways we were following that after the triple cycle from the daily time frame, we were expecting corrective cycle. Corrective cycle could be in 2 waves, A, B, C, D, or a range. And this is where I would like to show you, this is where we follow up in the live trading room and sell the rallies after this corrections is our plan. Basically what we got is the first leg from the daily gave us the 3 lower highs, lower lows. This is the exact trending structure I always talk about. And this is the first leg, right? That's the rallies as it happened. Reached a very important zone here, inner zone, as we can see that, right? And from there, the idea is go into the sells. Before that the sells took place, this was our plan: get the corrections into waves. And as you can see on the Euro Yen, this is exactly what we enjoyed from during the week. And then, of course, the reversal started to happen. I mentioned before that the short term are the ones that things tended to happen on, and basically take a look what I refer to. The 4 hour was a bearish hidden divergence. Let me just show it again, please. Right here. It's developing the bearish hidden divergence for trend continuation. Very valid thing during the trending structure as we had them. And the 1 hour chart delivered here the false breakout. Okay, on the reversal, the rising trend line was broken, and most important, we started by the break of this low, recreate the bearish trend by making 3 lower highs, 3 lower lows. Okay, so as you can see, full flow starting from the higher time frame through the lower time frame. And what's next with this pair? The view remains the same. According to the daily cycle, we should be experiencing corrective cycle, and this is one of these 2 options, A, B, C, D, or a range. this or other way around, the sell rallies remains the same plan. So for those of you who are enjoying the sells, manage that and enjoy your profits. An ideal target for that, if the bears really continues with the control, is going to be the 50% Fibonacci. And also you can see we have a strong clearance zone right here. So would be very interesting to see for price action there. If the bears do continue the momentum to the downside, I believe this is where we are going to slow down. Both daily and 4-hour will start to face the divergences. So let's see how it develops, and if you enjoy this opportunity and you ride at the sells, let me know about that. And in general, if you find this video useful, educational, helpful, please show your support back, hit the like button, and leave some feedback in the comment section. And I also decided to offer another 3 months. The one on the previous week was successful, and I decided to go for another month. So all you have to do is, again, if you find this video useful, helpful, and you would like to leave your feedback, by leaving your feedback in the comment section, you earn yourself a chance to get a free access to Traders Academy Club for 1 full month. I will announce the winner during the week. Now let's continue to the next pair, and that was the Euro Franc. What we wanted to see on the Euro Franc was the creation of higher highs on the 4-hour chart. After the sorry, what did I do? Using this virtual pen causes some wrong buttons. So basically we wanted to see a false breakout and break of this high to lead us for buy retraces, or alternatively to create 3 higher highs, 3 higher lows, and then buy retraces. But we are still following up for this setup. It never happened yet. We are still below this high we wanted to break, and we never completed 3 higher highs, 3 higher lows yet. We got 2 of them here, but not 3, and now we have new low, so it has to go expanded. So a bit more patience with that for the longer term. However, during the short term, during the week, that was a beautiful trade opportunity here. And on the inner count during the week, we faced higher highs, higher lows, 2 waves pulled backouts, and that was our chance to enjoy from little rally. Again, during the day, not a big move, but before the long term are creating what we expect, sometimes the short term is tradable if the patterns fit in, and in that case they did. So we're still following the 4-hour chart to create it for us. Next one on the list was the Euro New Zealand, where we wanted to see a drop and the buys basically until we create some reversal signs on the daily time frame. Checking the Euro New Zealand, so basically here is what we faced. We got a retrace down, which was deeper than expected originally. Bullish hidden divergence created, and now we are facing the rallies. During the week there was a contradiction sign on this pair, and that's basically where we stand. It started to make 3 lower highs, lower lows on the 1-hour chart, which contradicts completely to the daily cycle. And then we got the 2 waves correction, and basically this is our trend line. Break below this trend line invalidates the bullish view. So what do we have? We got a bearish hidden divergence from the daily, we got a 4-hour bullish divergence, and a 1-hour chart again making bearish signs. That's contradicting signs, and I dislike to stay in such conditions. That's why currently I moved the Euro New Zealand simply to neutral. And this is the synchronization lose I mentioned at the beginning of the video. Okay, when the synchronization is lost and the multi-time frame scan analysis does not line up or doesn't rhyme among all of these time frames that are involved, then it's simply best to step back, go neutral. There is always another pair to follow, and there is always tomorrow when it comes to trading. Never chase and force the market. And always remember the most important thing. The market never cares of the line I draw, you draw, or anyone else draws. Our lines are just to help us to forecast our moves, and only if we can fit the facts that the chart delivers to us, provides to us, then we can trade. If we get contradicting signs, we simply step back. Okay? Very important to remember that. Pound dollar is our next one, and that was a bullish view where I wanted to buy retraces. Unless, and this is a very important thing which I want to discuss about now, read here, if the price moves lower and breaks below 61.8 in straight move, then the bullish view invalidated. And here is what happened with the pound dollar. Despite providing the bullish fake signs at the beginning of the week, now look what happened. Straight move, close and hold. You see the next couple candles? Hold below the 61.8. Game over for the bullish view. Buy retraces here never delivered any trendline breakout, any the bullish hidden divergence that came in play, or any other sort of setups. It simply went straight move down. When it does so, this is where invalidation comes in play. And this is where we followed up in the Traders Academy Club live trading rooms. And once this move completed, we are back to the original analysis where we got 3 lower highs, 3 lower lows, with 2 deep wave of correction, or you can even say we have here a ranging correction and a bounce from there. Bearish momentum through the lows, creating the bearish convergence. And our idea then, as shared in the live trading room, is right here. Get this is the new structure we got, lower highs, lower lows, get the 2 waves correction and go for the sell. And this is where we are, and this is exactly what the market delivered to us. We got the 2 waves, we got the breakout, all the rest is history. This is a ride of more than 100 points right now, with amazing risk reward. Well, I just draw trendline breakout just for example, of course. Okay, so that's it, and that's the importance of following up the facts. Because at the beginning of the week, look at that, right here. Okay, the way it structures here, it looks super bullish, very impulsive. 4-hour chart creates new high. It looks super bullish, and we have a bullish plan. But I told you before, and I will repeat, the market does not care of the lines we draw or the way we wish to see the chart moves. The market does what the market wants to do. And we as traders have to be able to read that, to adjust, and to follow the facts. And right after that, straight move through the 61.8 Fibonacci, as I explained on the previous week. And we immediately adjusted to the bearish view in the live trading room, as you just saw. And sell the rallies was the plan, and here we are. So what's next? We remain in bearish view, expecting the double wave continuation. And this is the current cycle we are playing here. And this would be the ideal target for the pound dollar. Basically, after this triple cycle with the bearish divergence, ABCD correction. What to pay attention to if and when this becomes a bullish divergence and the MACD ticks to the upside? This would be the warning sign that it's best to cash out. Also the 4-hour chart to follow, right? If and when this becomes a bullish divergence, this would be a good place to do a cash out. So follow up. Meanwhile, the bearish momentum is on, and I wanted to explain you here the importance of the synchronization among the time frames and clear plan for validations and invalidation. Pound franc we abandoned the previous week, so we skip that. And before I move on, also from the pound there is one more pair which we trade. This is the pound yen. Triple cycle from the daily time frame with the bearish divergence and the expectations of the corrective cycle to the downside. So during the week we got this structure, and basically this was the beginning of the second leg as we saw. Then a false breakout here, which makes that to become a possible range in correction, and that's why we are into the sell. And here we are, another one I want to show you from the, by the way, this is the trading report from the live trading room, okay, directly from there. This is what I told you before that we do on daily basis, and that's our watch list. So this is the pound yen, and I expect the bearish continuation with this structure, okay? Lower highs, lower lows, especially after completing the false breakout. And then the pair started to follow up, completed the false breakout here, and the lower lows, convergence idea. And that's all. Since this moment, the confirmation becomes again bearish, and my expectations remain bearish as well. What to pay attention to? This ABCD correction trend line. Because if it breaks above this falling trend line, that becomes as ABCD. Okay, ABCD. Correction of this triple dab. And that would be, if it breaks above that, invalidation for the bearish view. So for all those of you who do ride, fantastic. For those who don't, the bearish view remains on, and sell the rallies could still be a very interesting plan. On the 1 hour chart we also see a trending structure, so let's say sell the rallies could be good here. And again, as you already know, 61.8 in that case in trending structures, if we suddenly go straight above that, this is the invalidation to the bearish view. So very important to pay attention to these little things. The devil is in the little things, and that's where the whole difference is. New Zealand CAD, we discussed about a cash out in the previous week, and to make long story short, I would like to go back to the daily analysis where we got a triple double here, and basically it expands a bit. So what we want to see is the turnaround and the break above that. Once the trend line is broken on the lower time frame, what I want to verify here is the, let's just draw it, is the creation of the bullish trend. So I want to see that the trend line from the daily is breaking to the upside, but is verified in the bullish direction on the lower time frame. If we have that, buy retraces becomes our plan. And this is the New Zealand CAD, and all that comes from the analysis. Oopsie, wrong line. And all that, again wrong, now should be fine, from the analysis of the corrective cycle expectations right here. Next one, New Zealand, CAD Yen. Basically, we wanted to see the pair coming to this area, completing the bullish divergence here, and then, and only then, we can go look for the corrections to happen. And here we are, as you can see, nothing else to say, completed the bullish divergence. So what is expected from the pair right now? The way I see that, and I might be wrong here, but I believe this is what we should experience right now after the triple the triple cycle. I believe we are into corrective cycle. That could be 2 waves or any sort of a range, but the dips with the bullish evidences is what I would want to look to trade on this short term. So for me, CAD Yen should provide these 2 waves or this range and then it will be possible to trade from the bottoms. That's my view about the CAD Yen on the current scenario. We got the plan here pretty good. EURCAD, triple cycle from the weekly, daily trendline breakout, trending structure on the 4 hour, and we wanted to see the higher, buy retraces. So here we are with the retraces. As you can see, deep retraces currently happen on the EURCAD, and it basically come in contradiction. What do I mean by that? It's not just a retrace, and it is simply 3 lower highs, lower lows, which contradicts the trending structure we expected. What does that mean? Remember the synchronization I was talking about? This is exactly a loss of synchronization, and this is why EURCAD currently, without providing any good, because look, at that point it was looking like okay, we have an ABCD, so break above this trend line and we should continue to the upside. Never happened. Instead, we got 3 lower highs, lower lows, which invalidates the bullish view. Why? Because it simply contradicts to the analysis from the higher time frame. That tells us that the market is not ready, the buyers are not ready, and it doesn't fit. The price doesn't fit in our analysis, so we go neutral until the picture would become clearer. That's the way I work. As simple as that. Yes to synchronization, I'm in. No to synchronization. It's if I'm involved in a trade, it becomes a loss. If I'm not involved in a trade, it saves me, because I simply go neutral, like in this case. Euro dollar, another look at the importance of validating your things. We wanted to see the trend and breakout, right? And basically creation of 3 higher highs, 3 higher lows. Then buy retraces would be the plan. And look at that, the trend line from the daily never broken, and we never got the third high. Instead of that, look what did happen. 3 lower highs, lower lows, bearish trend, 2 waves correction, and the trend and breakout. That looks like a bearish trend. We broke below, and we now recreate here 3 lower highs, lower lows, checking on a daily time frame. There is nothing to prevent any possible continuation, and the weekly, potentially, if we drop the Fibonacci's expansion, and after figuring out that this hold does not create a bullish trend, the next possible zone is going to be here. And from my point of view, personally, this is what we currently develop. It's 3 lower highs, 3 lower lows on the daily. This leg is also trending structure on the 4-hour chart. So, look, there is no divergence ending or anything like that. So, personally, I think we are into the bearish view with a clear invalidation here now, and that would be the 61/8 of the move down. Because if we suddenly go in one straight leg above that, as you already know, this is invalidation, right? For the view, bearish view. And this is why I was following a very clear validation here, right? We wanted to see trend and breakout from the daily. We wanted to see higher highs, higher lows to gain the momentum. Never happens. No problem. Step back and game over. Right now, our plan invalidated. No buys were provided. The seller power comes in again. Sell, the rallies become the plan. And that's what we have from our Forex view. Now I do want to go over the another opportunity that is facing up here, actually two, and one of them is the Euro Pound, where in the live trading rooms we went in the bullish view here, and here is why. The trend line was broken, 3 higher highs, 3 higher lows, 2 waves correction, trend line breakout. Our plan became bullish, and here we are, basically, right, climbing higher. So what I expect from this pair? according to the daily cycle, I would not be surprised if we continue in the corrective cycle here, which means to the upside. So remember, the correction is two waves or a range. So one of these scenarios is what we're gonna face. But these drops with bullish evidences, like the one we faced right here, right? ABCD correction with the bullish divergence. That's where our power comes in. And this is basically, now look what I always refer to. This break of the trend line here is the beautiful signs as we saw them. Okay? Straightforward. And now look how it looks like. Why it jumped here? And now look like how it looks like on the plan. Okay, trend line was broken on the 4-hour chart, and this is our plan. Okay, get the third high. This is from the live trading room of Traders Academy Club. Get the higher highs, get the retraces, get the buys. Here we are. Get the third high, get the retraces. In that case, we got our classical two waves, bullish divergence, and get the sign for the buy. Okay, so once again, this is the synchronization, and that's what I wanted to show you here. That's, you build a plan, the market follows the plan, deliver you valid setups, boom, you got a trade, you got your chances. If it doesn't, do not force. And this is a terrible mistake that most of traders do. They make analysis and that they marry this analysis. They believe that this is the only thing to do. No! If the market changes its view, you follow. Change the view. Never force your expectations on the chart. Follow the chart. It knows better what to do. If it fits in your analysis, beautiful. If not, it's a no-go. And I said before, we have also other opportunities. Yes, we have Aussie Kiwi, we have the Aussie Dollar, we have other pairs here on the list to trade, and I would like to invite you once again, if you want to trade with us, to get all the ideas during the week on daily basis, follow us in Traders Academy Club. You can find the link right here, as you can see, more details in the description below this video. You would find the links to join there. You can find the links to join us in the pinned comment in the comment section as well, and enjoy from all the trading ideas. And the importance here is, again, because the market is moving, the market is changing, and the ability to follow that, to adjust, to build up the clear plan during the week, to set up these ideas and the setups as they happen, that's where your force is as a trader. And this is what we do in Traders Academy Club. No magic, no shortcuts, and no holy grails. We simply follow the market and we really trade it, and that's all, as simple as it sounds. If you want to be part of our family, you are more than invited. Our doors are open, and the link to join and below this video. Let's continue then to our next industry. It was the cotton, which we wanted to trade. Okay, so going back to the chart, as explained, we expect the continuation down, and where we are here, and nothing really changed since then. We're still in the bearish view. The only thing I would be paying attention to right now is the way that the 4-hour chart starts to slow down. Okay, you can see here we start to create some signs of the divergences. So I would not be surprised if this zone here of all these supports would become the area where we start to experience retraces. But as long as we would remain below the 61.8, all right, in one straight leg, so we don't go like this, as long as we will remain below that, corrections, and I believe for continuation. The way I see that for cotton is this, or ranging correction. But right now, the seller rallies is seems like the correct direction on the last few weeks. Okay. Oil is something we traded during the week in our live trading rooms. Quick one to show, we got finally the bounce from the 50 as we wanted to see. 3 higher highs, 3 higher lows, so we wanted to see the rally taking place. Here we are. Rally taking place, and this is where we got it. The question is what's next with this one. So we currently face expanded 3 higher highs, 3 higher lows with the 2 waves correction. The way I see that, if we manage to break above this trend line, it will make a triple double for us, so I expect a continuation. If it creates one more low, it makes for us 3 lower highs, 3 lower lows in that case, and then according to the daily we should see the continuation until it will recreate a bullish divergence. And then the levels to pay attention to in such case, as you can see, could be very, very, very deep. So definitely want to follow on oil, and follow us in the live trading rooms if you want to enjoy from the daily updates on this one. Nasdaq break above the falling 2 waves would invalidate the bullish view, and this is what happened. It broke above that, it invalidated the bearish view, sorry, not the bullish, the bearish view, and that's all. Nothing new I can see there currently. Ethereum is and Bitcoin both are approaching to the desired levels. Here is the Ethereum critical level here, critical level here. I believe this is where we will start to see the slowdown. Also pay attention to the extreme zones that the market is approaching to. I believe we're gonna face some corrections from there, and then likely a continuation. 4-hour chart starts to round here slowly, as you can see, with a divergence. And the 1-hour chart is the place where we start to face the false breakouts and the slowdown. So once we create the lower highs, lower lows, I believe the correction is going to take place. 3 lower highs, 3 lower lows, of course, not less. And same with the Bitcoin, which continues its momentum, approaching to the desired zone. As you can see, slowing down with the divergence. 4-hour chart rounding as well with its divergence. And for 1-hour chart, we already got one false breakout. We might go and experience here a second one, right? And by the break of this low, once we start to create a bearish trend, this is likely the place where the correction is going to begin. And yeah, I believe for the longer run, it's yet very bullish. So that's pretty much it for this week. I would like to repeat that on the next week, on the next couple of weekends, I would not be around to publish the forecast. So I hope, guys, you follow the work there. I invite you, the work from Jordan there, of course. I invite you to join our live trading rooms and to enjoy our ideas as you saw them on daily basis with daily updates and daily plans. And to stay tuned with what the market delivers. The links to join, including the free option to join the Traders Academy Club with the brokers program, you can find below this video in the description or in the pinned comment. And if you find this video and the trading ideas helpful, useful, hit the like button, show your support back in our work, leave some feedback in the comment section. Your help is very much appreciated. And I wish you a fantastic trading week, next 2 weeks as well, of course, and I'll see you 3 weekends from now, and I wish you all the best and a successful February trading month. Thank you very much for your time and for your attention. I'm Vladimir Ribakov from Traders Academy Club, and I'll see you soon.